So I'm thrilled today to be joined by Giga Metal's CEO, Mark Jarvis. How are you today, Mark?
I'm very good, Romeo. How are you?
I'm good, good, thank you. So just wanted to ask you, there's a couple questions about your background, which I find really interesting, and then we'll get into real specifics about Giga and the Turnigan project.
Sure.
So to get started, based on looking at your background, it really looks like you have significant experience starting out in oil and gas. And what I'm curious about, I know we have an industry audience, is how is that industry similar or different to junior mining?
Well, my experience in oil and gas was originally as a broker. I would finance exploration plays. And so it would be oil and gas exploration or mining exploration. And, there's similar risk reward profiles, but they are very different businesses. And I just happen to like both and had, some early success in oil and gas. So that that kind of influenced, what I then continue to do. But I always loved mining. Mining's harder than oil and gas. With oil and gas, it's binary. It's you drill an exploration well and you either hit or you don't hit. One or the other. And if you do hit, you got cash flow. And so that makes, in some ways, that makes the business easier. In mining, if you hit something, now you've got to start spending more money because you got to drill more and see how big it is. So it's kind of inherently harder. But I always enjoyed both. I liked, chasing the big prize. Even though it's risky, I was always willing to accept the risk for the chance of making a big score.
And I think that's what drives a lot of people into mining, is that chance at the big hits. I think is certainly really exciting. But going back to your experience as a broker, I know a lot of people in your current line of work describe being a broker as on kind of the other side of junior mining. And I'm curious, because you spent so much of your career there, what do you think the skills and perspective on the industry did you gain from being on that side?
Well, for one thing, it was very different then. I'm kind of dating myself here, but at the time, when I was a broker, if I found a company I liked and a project that I liked and a management team I liked and the price was right, I'd get involved, and that went beyond just doing the financing. That went into we would accumulate stock out of the market. I would make a market in the stock out of my own account just to keep the spreads tight and that sort of thing. And I would do everything I could to try and influence the success of the deal. I would help the management think about how they would approach investor relations, that sort of thing. I dive right in there. What's changed since I was a broker, and I stopped being a broker in '96, is basically commissions have dropped to zero. And so there's nothing in it for a broker to be putting his clients into the open market in a stock. It's become a much more transactional business. So basically all brokers do is financings, and because that's where the money is. They can make 6 or 7% commission, and they're not going to suggest open market buying to their clients because there's absolutely zero money in it for them. So it's very much business that's changed.
Sure. And it is, I mean, the financial incentive is always what you can track for what people what people are going to recommend and what they're going to do.
Sure.
But let's jump ahead to 2004. Curious, what made you decide to join the company that became Giga Metals?
Well, it was interesting because I'd been retired for a couple of years, and I was coaching my daughter's soccer team, U10 and U11. I coached it for a couple of years. It's having a wonderful time. And I'd retired after Ultra Petroleum, which I'd been deeply involved with. I was on the board of that company. And and raised most of the equity financing that we raised. And then the company progressed and we were able to use debt financing to keep drilling, and it just grew and grew. It ultimately was 3 trillion cubic feet of proved reserves. So that was a very nice pass. And, you know, and I just wanted to take some time off. I wanted to retire. And then I was running my own portfolio, you know, sort of a mix of conservative and also still speculative in another portfolio. And I became very bullish on base metals. And this was in 03, 04 sort of thing. And so I was buying, you know, both large companies, but I was also buying for my own portfolio, you know, smaller companies that had, you know, that I felt had a shot. And by the way, to this day, I still run my own speculative portfolio. I'm still in the game. But thank goodness I've also got a conservative portfolio that's done much better in the last 3 years or so. So I came across this company and it was in trouble. I liked the play right away. And what I liked about it was that it was similar to what Ultra Petroleum had. In other words, it looked to me like it was huge. The economics, like Ultra Petroleum, were marginal at the low end of the commodity price range. But because it's huge, if you've got huge and marginal at the low end of the commodity price, as the commodity price moves up, the value of the asset balloons. It's really remarkable how that works. It's just pure leverage. And that's what I saw here. The company was in trouble because, you know, frankly, the management, well, they were in trouble with the regulators for 43-101 violations. They were claiming that they had 1 billion tons, but they hadn't drilled 1 billion tons. They didn't have, you know, they didn't have any backing for that. And so, you know, this was a case where the regulators were right. Stock was suspended. It wasn't coming back. And so I ended up negotiating with the management because I believed the 1 billion tons, even though it wasn't drilled off. You could look at it and you could go, okay, well, there's a hole here and here's another hole 500 meters away. It's the same thing. You can't connect the dots, but you kind of can connect the dots in a way because it's a reasonably homogeneous type of deposit. So I negotiated with the management for them to leave, and I took a big private placement, and that was the start of my personally investing in the company. And then we had a really good run from 04 to 07. You know, it was a bull market. They called it a super cycle at the time. Nickel went crazy, and we were able to raise a lot of money and drill a lot of holes. So we eventually proved out the 1 billion tons, and then anyway, that's how I got involved. I wasn't looking to get involved in anything. It's just this project just kind of got under my skin.
Yeah, sometimes a good project finds you one way or another. But jumping forward again, I mean, we'll get into the details of Turn Again, because it's obviously an attractive enough property that you're able to attract a global automaker and manufacturer as a partner. And for those unfamiliar with the story, for anyone listening, I'd love if you could share how that came to be, how you really attracted Mitsubishi Corp in the first place.
Well, I got to give a lot of credit to Martin Vidra. I mean, you know, the most important thing in terms of attracting people was being able to get a hold of Martin Vidra, and then through Martin, getting Lyle Tritton, who's our in-house engineer. Martin had a 31-year career at Sherritt as an engineer, but then the latter part of his career, he got into marketing, so he would sell various nickel and cobalt products to end users. So he had a trap line. He knew people. He knew people in the trading houses and the Asian trading houses. He knew end users, you know, battery makers and stuff like that. And he decided to exit Sherritt. And, you know, I mean, he could have gone to any project in the world. He chose us. And the reason he chose us is that, A, he believed the engineering, and B, he loved our concentrate. He looked at the concentrate that we're able to make. He said, I can sell this. Anyway, so he got involved. And then he started working with me, and I just said, look, you're the guy with all the contacts. You know how these big companies work. You know, you're in charge of our outreach to potential strategic investors. And that's where it all started. He knew some traders at Mitsubishi. We met with them a couple of times. And then I think the third time we met with them, they said, well, this is interesting, and we're going to introduce you to our investment arm. And then we got involved with their investment arm. Now, my understanding is, I mean, they looked at every large undeveloped nickel project in the world, and they selected us. And they know what they're doing. This is not Mitsubishi, the car company. That's another division. It's way over here. They may or may not have ever heard of us. This is Mitsubishi, the commodities trading division. And then within that division, they've got a raw materials division that likes to get involved at the development stage of a mine. They've done this many times, very successfully. They'll get involved in the development stage, at our stage, and they will become very supportive. And as they continue to develop the project, as long as it doesn't fall apart for some reason, they will be there, and they will help to bring in other partners. And basically, they want to get it built. Anyway, so that's how Mitsubishi came about. And now, you know, Martin is continuing to lead our efforts to engage other strategic investors. I can tell you, you know, the nickel price is down right now, but a lot of the strategic investors are going, oh, goody, now's the time to do a deal. You know, it might seem counterintuitive, but that's kind of the attitude that we're running into. And then it's not just Martin. We also have Mitsubishi working on behalf of our project to try and find clients or new investors. So it's a very constructive relationship. And then, you know, by the way, one more thing about attracting people is that Martin then told me, look, the best engineer I have ever worked with is thinking about leaving Sherritt. You know, you got to hire him. And so we did. And awfully glad we did, because Lyle is not only an incredibly smart engineer, but he's also I don't think he knows how to bullshit. I don't think he even knows how. And so, you know, when he opens his mouth and says something, everybody believes him. You know, he's become an important part of the strength of our relationship with Mitsubishi. So, you know, it's just it's a small team, but it's a really good team.
Yeah, that type of integrity where people just believe you because you never BS it's hard to find, especially in this industry. It can feel rare, so it's a good trait for sure.
Well, what's the old saying? Mark Twain said, "What's a mine? A mine is a hole in the ground with a liar standing in front of it."
Yeah, might as well be the subtitle of the industry. But just jumping ahead a bit more. So I know last year you released the pre-feasibility study on Turn Again. And just for those watching, what do you most want investors to take away from that study?
Well, it's a project. It's a real project. Every step of it works. We've removed so much risk from it. And it's accurately described. We haven't pulled any levers to try and make the economics look better. It is what it is. This project, you know, if nickel's at the price it's at right now, project won't be particularly handsome economics. But, you know, if you get the nickel price to $9, $10, $12, that's kind of the sweet spot for this project where, you know, the economics get very robust indeed. And, you know, and then every once in a while, nickel will spike to the, you know, $40 level. in 2020 dollars. I mean, you make incredible money when those spikes, and nickel spikes every 20 or 25 years, and it'll be way up for 2 or 3 years. And if you can be in production when that's going on, it's just incredible how much money you make. So that's the main takeaway. We de-risk this considerably. We can predict, thanks to our geometallurgy program that we conducted during the PFS, all different parts of this deposit, different lithologies, different chemistries. We can take an assay and we can predict what our recovery will be from that particular sample. And with very narrow error bars. And that is, if you're going to build a model, you're going to build a cash flow model and a financial model, it starts with recoveries, well, grades and recoveries. And, and if you're accurate with that, that's at the core of the model. The model lives or dies on that. And so that is so important. And we're absolutely delighted with the success of our geometallurgy program. We'd like to do more work, in fact, because we think we're really onto something in terms of being able to predict recoveries.
Hey, I always like to end these quick chats by just asking, what are you most excited about at Giga for 2024?
Well, I think we're going to get a partner. I can sense the appetite out there, and the terms we're asking for, we're not looking to dilute our stock at all, because we think the market is an incredible misprice, and I don't want to, if I can get away with it, I don't want to dilute the stock at all. I'd rather raise all of our money through selling off a piece of the project on reasonable terms. The terms we're offering are a bargain for the buyer, but they're also a good deal for us. So it's win-win, and stay tuned.
Awesome. Well, Mark, thank you so much for joining us today.
Well, thanks, Romeo. A pleasure to talk to you.